Today we'll be taking a little bit deeper dive than we have in the book on IRS debt as it applies to bankruptcies. We get this question quite a bit from taxpayers about, can I discharge IRS debt by taking bankruptcy? And the good legal answer to that is it depends. The bankruptcy code, first of all, changed back in 2004 to the extent that the bankruptcy courts were pushing more and more people towards Chapter 13 bankruptcies as opposed to Chapter 7 full discharge bankruptcies. So first thing off the bat here that we need to, I guess, set some ground rules is we're talking here, when we say bankruptcy, we're talking about Chapter 7, the full discharge type of bankruptcy, okay? Chapter 13 is a payment plan type of bankruptcy, a 5-year plan. And folks that aren't eligible for Chapter 7 typically get moved over into that Chapter 13 type of bankruptcy, which allows for a payment plan. And in those Chapter 13 bankruptcies, the IRS typically gets paid its full tax. You might be able to get rid of penalties and interest in the process of doing a Chapter 13 5-year plan. But we're talking here primarily about Chapter 7 full discharge bankruptcies. And so just wanted to get that kind of out there on the table, first of all, so that we're clear that Chapter 13s really aren't something that's in play. And, you know, to kind of get the things out of the way here up front. Also, I'm not going to be talking here at all about whether or not you would otherwise be a Chapter 7 bankruptcy candidate. What we're talking about here is dischargeability of 1040 personal debt and some other things that flow through to persons in this process. Okay, so if you need some direction on whether or not you'd otherwise be a Chapter 7 bankruptcy candidate, we're not your place. There are plenty of competent bankruptcy attorneys who can tell you about your other debts that might be dischargeable in bankruptcy. We're just talking here solely about a IRS tax debt type of analysis, okay?